has been a relative new sector in the global financial scene. The resurgence of Islam and the growing number of Muslims who wish to live their life in compliance with Sharia, especially in the banking and finance sector, are the main forces behind the rise of the Islamic banking. In Malaysia, Bank Islam Malaysia Berhad was established in July 1983 as its first Islamic bank license under the IBA. Similar to other licensed banks, Bank Negara Malaysia was vested with powers under the IBA to regulate and supervise the Islamic bank. BIMB commenced operation on 1 July 1983 with a paid-up capital of 80 million ringgit Malaysia and a branch in Kuala Lumpur.
Now, we will embark on our journey into the captivating realm of the Islamic financial system, a dynamic economic framework guided by Sharia principles. This system not only shapes the financial landscape, but also acts as a guiding force in many aspects of Muslim life, transcending mere rules to illuminate the paths toward the economic justice, fairness, and social welfare. The key points here are, at its core, the Islamic financial system hinges on the vital concept of Sharia compliance, ensuring that every financial move aligns seamlessly with the timeless principle found in the Quran and the Sunnah of Prophet Muhammad. This foundation traces its roots back to the Middle Ages, evolving over time into a comprehensive system that extends far beyond interest-free banking. Within this framework, Islamic financial institutions stand as pivotal entities, including Islamic banking, takaful, and investment funds. These institutions share a profound mission, reaching beyond mere financial transactions. They are committed to promoting economic development while upholding unwavering ethical standards, envisioning an inclusive and equitable financial environment that benefits people from all walks of life. The cornerstones of this system include the avoidance of interest-based transactions, or also known as riba, the encouragement of risk-sharing, and the promotion of tangible economic activities for the benefit of society. These principles serve as a guidepost for ethical financial conduct.
For my part, I will explain further in financial instruments. There are so many financial instruments that already exist in Malaysia, but I will explain only one, which is takaful. Takaful is a type of insurance system devised to Sharia compliant in which the money is pooled and invested. It protects against variety of danger. From this slide, you can see that we provide some data from MTA, which is Malaysian Takaful Association. It says that Malaysian Takaful sector performed well in 2022, owing to rising demand for Islamic financing preferred protection plan. With a total of 1.31 million new company certificate issued, a 15.6% increase over the 1.14 million certificate issued in 2021. The number of certificates enforced in 2021 has climbed to 9.1% to 6.63 million, up from 6.07 million in 2022. Based on the number of certificates enforced against the total Malaysian population, family takaful achieved a penetration rate of 20.1% in 2022, up from 18.6% in the previous year. Penetration rate is the percentage of the total population or a specific market that has purchased takaful insurance product. MTA registered 39,027 new agents in 2022, indicating that the robust recruiting trend that began in 2021 will continue. The figures are greater than those seen before the pandemic, which serve as an essential indicator of the industry's sustained strength as we move from the post-pandemic to the endemic phase of our economy. Overall, we can see that takaful is in high demand currently. In 2023, the Malaysian Takaful Association, MTA, launched the Takaful for All campaign as an initiative to raise public awareness about the concept and benefits of takaful, as well as promote financial literacy through a series of activities such as roadshows, contests, engagements, and a series of media activities across multiple platforms, including mainstreams, digital, and social media.
Islamic current accounts invest money in ways that comply with Sharia law and are based on card. Predicated on the idea of Mudarabah, Islamic banks distribute their revenues after doing transactions according to Sharia. Banks charge their clients for their capital or deposit in exchange for their services and expertise. In this arrangement, The investor bears the loss while the bank and client split the profits according to a predetermined profit-sharing ratio. Sharia permits charging a fee for certain unfunded facilities. Islamic banks are prohibited from charging interest. However, they are permitted to make a profit when selling customers' imported items on loan because in these situations, the import is conducted at the bank's risk. Treat money or currency as a mode of exchange. Hence, avoid making money through sales or rentals. A fixed asset may be rented, or they may profitably offer the customer an asset that complies with Sharia. Conventional financial systems are based on loan. Money lending and interest-earning businesses use the deposits made by customers. Depending on a loan structure, conventional banks give their depositors profits in the form of interest earned on loans. It is permissible under Sharia to charge for these unfunded facilities. If conventional banks handle payments for their clients, they will charge interest for any late payments to the bank. Money is rented for interest and sold on interest because it is treated as a commodity.
For my part, I will be explaining about the factor shift toward the Islamic finance. The first one is Islamic principle religious value. Islamic finance is grounded in a moral and ethical consideration based on a Sharia compliant from the Al-Quran and our Prophet Muhammad sallallahu alaihi wasallam. It prohibits riba, adopt a collaborative profit and loss sharing based model. Asset-based transactions boost transparency while opposition to gambling and uncertainty is emphasized. Islamic banking prioritizes social justice, fair wealth distribution, ethical investment. Honesty in contract is aligned with our customer need, which is a religious and ethical value. Second one is Islamic product. Islamic product, we have three types. The first one is Islamic mortgage, murabaha. Bank can buy and sell the property to the client at a markup to eliminate the interest charges. The second product is Islamic saving account. Operate profit sharing model based on a bank investment, diverging from traditional to the base saving. The third one is Islamic credit card. It's allow interest-free borrowing with a late fees charge of interest. This all offer product value meeting the growing demand from Sharia compliant financial industry. Our last but not least factor is a profit loss sharing. Islamic finance is actually certainty sharing. Is based on profit, not the loan principle, differing from the interest-based approach oversight by the Sharia supervisory DPS. Is prevent anomalies, emphasize strict adherence to Sharia to avoid our bank failure. Customer no need to worry about income withholding if Islamic banking deviates from Sharia loan to profit dictate certainty sharing with DPS is ensuring stability and adherence to Islamic banking principles.
Next, the challenges of Islamic financial system. One of it is market competition and innovative approach in Islamic finance. There is always rivalry for Islamic financial institutions, particularly when it comes to lending goods like business and home loans. For example, Islamic financial institution came out with innovative ways to ensure Sharia compliance and ethical concerns for Islamic financial products like home loans. This may involve making distinctive funding arrangements in line with Islamic law, developing creative Sharia compliant solutions that work better than conventional ones is the strategic answer. This strategy sets Islamic financial organizations apart and draws ethically conscientious customers. Sophisticated strategies combining Sharia compliance, innovation, and dedication to moral behavior are necessary for overall competitiveness. Then, cross-border trade and regulatory difficulties. Complex cross-border transactional concerns are involved in the global expansions of Malaysia's Islamic financial institutions. For example, joining a nation with unique banking regulations needed careful planning. Working together with international regulatory bodies such as the Islamic Financial Services Board has become essential for effectively navigating a variety of regulatory frameworks. It is essential to adjust to the various regulatory requirements found in other nations. It takes careful planning and increased compliance to expand into nations with different financial laws. Finally, the vulnerability of the Islamic financial system and the global economic reality. There are obstacles in the way of Malaysia's Islamic financial system integrating with the reality of the world economy. For example, Malaysia's Islamic financial institutions encountered difficulties in the 2008 global financial crisis due to fluctuations in the interest rate, commodity prices, and currency values. A rapid decline in commodity prices might result in lower earnings for an Islamic bank that has assets in commodities. The crisis brought to light the necessity of taking a calculated approach and looking into alternate investing options. Malaysia's Islamic financial institutions must learn from this disaster as they grow internationally, particularly in light of the COVID-19 epidemic.
In conclusion, the Islamic financial system in Malaysia extends beyond interest-free banking and encompasses various instruments including takaful as a Sharia-compliant alternative to conventional insurance. The performance of the Malaysian takaful sector in 2022 reflects a rising demand for Islamic financing products with notable increases in certificate issue, penetration rates, and net claims payout. However, the Islamic financial system in Malaysia faces challenges including fragility during global economic downturns, reluctance to adopt advanced risk management methods, complexity in cross-border transactions, and competition from traditional financial institutions. The response to these challenges involves strategic adaptation, innovation with Sharia principle, and collaboration with global regulatory authorities. Despite these challenges, the iterative process of refining strategies and embracing innovation within Sharia principle position Malaysia's Islamic financial institution to not only weather global economic uncertainty but also contribute meaningfully to the sustained expansion and acceptance of Islamic finance on the world stage. The experience of past crises serve as valuable lesson guiding the sector toward continued growth, resilience, and a commitment to ethical financial practice.